Good evening, everyone. This is Henry Gambell with SimplerOptions.com, and in today's free video I wanted to follow up on some continued thoughts with these earnings plays that we've been looking at this week. We are starting to see earnings that are starting to wind down. There's a couple that are going to be out today after the bell, and then a few more tomorrow morning, and that's what I wanted to take a look at as we get into the close today. Generally speaking, the closes have not been terribly easy as far as direction is concerned, so I have spent more of my time focusing on these earnings ideas. Now, the one that I'm looking at currently is Target, and when we look at this chart, I can go into a lot of detail to show you the reasons why I think the way I do. The first one that I would look at, and anytime I see something that is primarily just been retracing what was a previous much larger sell-off, the main thing that I always want to take a look at is what has this retracement been like in relationship to that previous decline. So we can do that by measuring this swing high to swing low, and this is what starts to give you your first area of what I'm going to be considering resistance as I move into this report. Yes, it has rallied back up above these broad moving averages, but holding your 618 area as resistance here is one of the first things that puts me a little bit on the sell side of this. Now, I may not want to be too aggressive with it because of the fact that these do sit here and, in theory may offer some support. If you wanted to look at this and say, in the end, aren't you kind of wedged in between resistance and support? I think that would be a fair argument. And then what I will try to complement with that is looking at my options open interest. Here again, not a holy grail by any means, but just something where if you can put all of the pieces together and try to formulate a story that makes sense with these, you can start to place spreads against them. So when I come in and start viewing the open interest here in Target, and first looking here at the call side, strikes like this stand out a bit, but it's not really relevant to the current price because they're so far in the money. As I start reviewing the out of the money options, you have 11,500 that are open at the 76, and then a larger chunk here at 80. The main ones that I consider to be relevant here are the 76s, and I kind of side or lean towards the side of saying there are vested interests that would have these expire worthless. Now, if I compare the same strategy or thought process on the put side, you have a large amount here on the 72 puts, and the next neighboring strike that really has anything even close to that would be here at 73.5, but the at the monies just really don't stand out the same way. At the end of the day, what this layout tells me, or at least the way that I think of it, is that there is a vested interest in the 76 calls expiring worthless, and then a vested interest in the 72 puts expiring worthless. Knowing that those are my two primary strikes to work with, how would I look to start positioning a spread? Well, what I'm going to be doing is looking at setting this up using a short 76. Now you could use the 75 as well. Sell those a little bit in the money. Either of those would be fine. And then what I like looking at is the unbalanced butterfly. I will start these looking at them at least $1 wide. And one of the biggest things that I like to point out the difference of here, because with this unbalanced butterfly, it's going for about a 35-cent credit, give or take. Well, in this situation, you are risking 65 cents to try and make $1.35. This strategy will work best with neutral results. And that's where I always tell people, think about this strategy versus what most would do with something just like a short vertical, because the short vertical will reward you or be more successful if you get the directional move lower. But if you look at a chart and say, that's a little bit more sideways than what I would want to be just straight up directional with, that's where that unbalance tends to be more helpful, and this is a good point to contrast those two strategies. So that's what I'm going to be looking to put on here into the end of the day with Target. I hope you found these discussions helpful. And then on the topic of using that open interest to try and help give yourself an edge with your trades, Chris will be putting on a class this evening. The strategy portion of that will start from 6 and will go until 8 Central Time, and then he will have some live trading to accompany that on Friday. So if you found that helpful or would like to add this into your trading arsenal, I hope to see you there.